The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon out near Cape Canaveral discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 18th fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call a happy person is not a person in a certain set of circumstances, but rather a person with a certain set of attitudes. What do you see? The donut hole or the donut? Heck, right now I could go for a donut. But which do you see? A donut hole or the donut? Is the glass half empty or half full? You know, the answer to those two questions can define whether you're an optimist or a pessimist. Take two people who make the same amount of money each year. One may complain while the other makes hay. One looks forward to coming to work each day, and the other dreads it. One is happy to be heading home feeling good about what was accomplished today, and the other, well, let's just say, not so happy. You know, everything in life can bring you joy. It's the attitude that we carry with us that determines our happiness. In fact, a happy attitude can help to create life's circumstances. Think about that one, folks. Here's what I say. It's often said that the happiest people on earth are those who are too busy to notice whether they are or are not. Think about that and how it applies to your life. Accept life unconditionally. As for most people, they ask for happiness based on a set of conditions. Remember, a happy person is not a person in a set of circumstances, but rather a person with a certain set of attitudes. Let's go check out the attitude of the market. Right now, we've got the Dow futures up 31 points, trading out at 15,327. S&P futures trading out at 1732 and a quarter. That's up 4.5 points. NASDAQ futures up 17 points this morning. They're leading the charge, just drafting behind Google. Out here, you got the NASDAQ futures up about 17 points, trading at about 33.18. Russell 2000 up, King Dollar back a couple of ticks. Not a ton of movement here in the currency market. Hard currency market, Goldilocks back $4 right now. Trading out at 13.18. Silver up 3 pennies. So we got a flat market out there after huge days yesterday. Light sweet crude, that's up 80 cents right now. Trading out at 101.48. Natural gas back about a nickel, testing the rising price channel that it, or the descending price channel that it broke out of. So that's a normal occurrence out here. We take a quick peek around the globe, see what's going on out here over in Germany right now. The DAX is up 22 points, FTSE up 32. In Asia last night, the Hang Seng down 25 points, no big deal out there. The Hang Seng up 245, a little over 1%, and the Shanghai up 0.25%. Our call-in number, it's 877 927-6648. If you give us a call, I would be happy to take a look at your stock chart, help you out however I humanly possibly can. Let's start off by taking a look at the daily charts here. We'll look at the daily charts here just briefly in this first segment. Then we'll take a look at some of the stocks here that are popping and dropping as a result of earnings releases. And then we're going to spend some time, because we're coming to the end of the week, let's just spend some time taking a look at the weekly charts of the indexes, take a look for bullish, bearish signs out here, support, resistance, things of that sort. So let's start off by taking a look at the daily ES Mini out here. Now, the swing point high was from September 19th. That no longer is the case. That was September 19th. That was 1726.75. We closed above that yesterday. Closed above it at the level of 1728.25. We're trading above that area right now. So if we just simply take a look at a Fibonacci expansion from swing point high to swing point low, just to see what the next target areas are, we'll just shorten up this chart here. Hopefully you're watching us on TigerTV. If you are just listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can catch the archive of this show on Channel 9, as well as get the live stream to the show by using that smartphone device of yours, that pad, going to the homepage of TFNN.com, upper right-hand corner, a button with 3 smartphones. Click on that. You'll get this show streaming live. And what you would see is from the swing point high on September 19th, 1726.75, down to the low that was put in here on October the 9th. That was at 1640. If you take that distance, get the difference, multiply times 1.272, add that to the bottom, which would be 1640. That'll take you to a level of 1750. That says that what we should see is the ES Mini move up to 1750. However, something to think about. Take a look at the 1.618 of that set of expansions. That'll take us up to 1780. The 1-to-1 confirmed A to B equals CD up that we have in the marketplace is at 1776 out there. It looks to me like that's really what is the pattern that is unfolding. In fact, what that will do, that'll set up a 1.6. Well, let's go see what that will do. If we actually start with the swing point back here, you'll remember the swing point, key reversal, day out here, significant swing point, May 22nd's high out there. Well, if we start with that swing point high, we go down to the low here on June 24th, we can actually go ahead and form a 1.618 Gartley sell pattern. Actually comes in right about here, which is at a price point of about 1770. So we have a number of patterns that are lining up right in the 1770-ish level. You've got a 1.618 butterfly. You've got a 1-to-1 A to B equals CD. And then of our last set of swing points, we've got a 1.618 expansion there. That is, and, oh, by the way, I said 3, right? I guess I really meant to say 4. Because what we also have is we've got the shorter-term rising price channel. This is the one coming off of the November 16th level. And that would be approximately the top of that. So that is where, over a period of days, weeks here, I don't know how long it's going to take. It's not going to happen today out here. But over a period of time, that is where the ES Mini wants to travel to. Now, when it gets up there, maybe it does some type of retracement, 0.382, 0.618. We'll take a look at things one day at a time. But right now, that's what the S&P futures are pointing to. We go take a look at the NASDAQ futures. Let's go see what they're pointing to. They are pointing to, folks. Now, you talk about the ES Mini just getting up over the recent highs. Now, what ours was, September? We were using September 19th here. Well, if we go back to September 19th, you can see the NASDAQ futures well above that. NASDAQ futures got above that level on October 14th, 4 trading sessions ago out there. So if we were going to use that as a benchmark just to kind of take a look at the two side by side, look, the NASDAQ futures is high flying. In fact, what the NASDAQ futures are doing right now, they're trading out at 33.19. Huge move off of the low, and one to be respected for sure, because when we take a look at this, market's not going to turn down without the NASDAQ. Come on, that's just not going to do that. And we take a look at the patterns out here. Look, the next target, just the A to B equals CD pattern on this says 33.60. Is that really where price is going to stop in the NASDAQ futures? No. No, I think the NASDAQ futures, well, they're looking more like about 34 something out here. If we take a look at expansions, let's do the same thing here. We're going to use the expansions of swing points. In this case here, let's use the expansion of the October 2nd high down to the low of October 9th. You'll see you're well above the 1.272 expansion thus far. 1.618 is 33.37. You're at 33.19 out there. Maybe that becomes a little bit of a resting spot, but I don't think so. This is a strong move off of that C leg out there. At a minimum, what we will see, you see those blue lines on my chart here? Hopefully you're watching that. Those are the actual rising price channel lines that go all the way back to March of 2009. March of 2009. The last time that the top of the rising price channel was tested inside the NASDAQ futures were in the March 2012 timeframe. If I pull this back all the way, you can see that's the real rising price channel that price is traveling within, and that is where the NASDAQ futures want to head on up to. So exactly what is that level? It's somewhere in the 3,400-ish level. Just depends on how quickly it decides to get up there. So that is on the NASDAQ futures. Now, let's go check out some of these stocks here that are popping and dropping in the marketplace off of earnings reports here. Leading the charge to the upside, let's see, what would that be? Dollar-wise, most certainly that would be Google. That's up $87 out here. How important was that hammer candle all the way back here on June 6th that it tested 2 times? Well, now Google is going to get up over its highs, going to gap up over its highs, the highs of 927.97. Right now it's trading out at 976.50, so it's on its way. Now, what we can take a look here at Google, let's just draw this in on the chart. We can see that Google's been traveling in a consolidation mode. There's your consolidation zone out here. So if we take a look at that, in fact, let's just draw that in. I'll just draw a secondary box out here. We'll just add that box to the top of the first one, and we'll scrunch, which, as you know, is a new technical term that Steve-O applies to stock charts out here. If we just take a look at what that move would be, that would take us right to the $1,000 level, maybe 1,001, somewhere right around there. So Google is headed to, remember, when you break a consolidation, and if we see this break here with volume, what that says is that is the minimum price objective. So in Google, it's headed to $1,000 plus. It's going to join the ranks of Priceline out there. Priceline now trading below $1,000, but Priceline was just simply waiting for some company to get above that level. So that looks pretty good. We'll see what kind of volume. I suspect that what we will see here at Google, I'll show you something pretty cool. Show you. I may have showed this to you before in the past. Not too many people. I know I have. I know I've mentioned it at least. Not too many folks pay attention to this. Where is my core button out here? God, it should be right in area. I'm sitting in the core button. Oh, what the heck? I'm looking at the actual chart. Here's the Google chart. If you take a look at the percentage of times when Google either gaps up, gaps down around earnings day, the direction that price travels in, that doesn't make the low inside Google. Some people might say, it's going to be an exhaustion gap or something like that. You go apply the earnings dates. This chart is perhaps I can't tell you why this works, but this chart is a great technical pattern out here. It says Google's going to gap up today. It's going to be in the 976-ish range, and if it holds that gap, it is absolutely going higher. Well, we know that the first target here is $1,000 or so. Looks like Google probably wants more than $1,000 out there. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So out with earnings before the bell here, Morgan Stanley. Let's ticker symbol here is MS, and right now it's trading up about 3%. Last trade fired off at about 29.79. Now I've got the weekly chart up on my screen. So where does 29.79 take us to? Well, the top of its last resistance candle here on the weekly chart is this shooting star. That's from the week of September 20th. So September 20th. You know, an area where we saw the markets, now this is the week, so on the weekly chart here, September 20th, the week where we had some confirmed A to B equals CD patterns out here. In the case of Morgan Stanley, it is a resistance level. It was the opposite of the hammer candle. So this is resistance, the price of which is $29.50. So Morgan Stanley's going to gap above or trade above that level today. If it holds $29.50, the question is, where is it going to head to? Well, if we take a look at this on a weekly chart, the swing point of an A to B equals CD up that I would use is February 22nd, 2013. That had 75 million shares. Now, that was passed with volume, 86 million shares. That gave you a confirmed A to B equals CD up. And the 1-to-1 on this says 32.33. So a little bit of resistance here at its most recent swing point high. If we go further back on the left-hand side of the chart, meaning the February 18th, 2011 time frame, that high is 31.05 on that following trading session here. That was actually what's called a bear sash candle out here, and that set up quite a bit of a move lower. Of course, that was back in 2011. That's where it's going to find some resistance next. Now, the cool thing is that old resistance becomes new support. So in the case of Morgan Stanley, the top of the shooting star, price of $29.50, ought to hold that support. So whether or not it can bust through this level, we want to pay attention to it, 31.04, because if it can bust through that level, that would be the next area of support out here. Right now, we're going to consider resistance. It's going to have to perhaps travel within this little bit of zone out here. But what it really wants to do is get up to the 32.36 range and probably 35.68. That's Morgan Stanley. Now, it's a real positive when we take a look at the financial sector. 35.57, which is where it really wants to head to. We'll take it all the way back into the highs of 2009, October of 2009. So that is a positive. That is where Morgan Stanley is headed to. Let's go take a look at some of these other equities here. Moving, you've got, let's take a look out with numbers of any significance. How about Chipotle? Now, talk about a little comeback here. CMG is the ticker symbol. It's going to open up somewhere around the 480-ish range. Well, that's going to take it over its highs. Its highs were back here in April of 2012 in the 440-ish range out here. In fact, so this, quite a after a huge downdraft that it had back in July of 2012, this thing is back off to the races. So let's go put Chipotle, CMG, on a weekly chart. Let's go see what we can find out here. So we can see the high that it's going to be taken out today, try to trade above, which is a resistance level. That says it should now become new support. It's going to be the high from April 13, 2012, $442.40 out there. A little bear sash candle that it also had here as it made its high the following week of April 20th. So this thing here, if we take a look at, is this possible an A to B equals CD? This would, not much of a retracement out here, but the swing point that we're taking a look at is one from May 24, 2013, 1.5 million shares, which was passed with 1.8 million shares out there. So I would say, let's first, let's just take a look at expansions of swing points. Meaning going back to April 2012, down to the low that was put in October of 2012 as well. The 1.272 says about 498. So while Google and Priceline are in that $1,000 range, looks like that Chipotle is headed to about the $500 level out there. Not too bad for a company that sells, what do they sell? They sell tacos, enchiladas, fast food restaurant. Hard to believe. But that is what the stock chart is doing. We got AMD. Let's go take a look at AMD. That is down on earnings. That's trading down about 13.5% here right now. So they're not enjoying the party. Last trade fired off at about 354. Let's go see what that is trading down into now. AMD ran into some real resistance here. Had a wide price spread, gap down on July 19th. The high of the July 19th candle, $4.08. Tried to pierce through that. Yesterday actually closed at 409. Not with any kind of convincing volume. There was 45 million shares, but the gap down it was going against was 151 million shares. So couldn't bust it up. We'll see if it can bust it down. It's going to trade down into the swing point here. The swing point low is 355. Looks like it's trading just slightly below that. That was from October 9th out there. Next area of support. Now, this had a real nice breakout. AMD had a real nice breakout all the way back here at about $2.67. That would perhaps be a nice buy. Maybe just put that on your pad of paper out there. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 22 points. Trade out at 15,349. S&P up 5 at 1738. Composite up 26 points at 3819. Russell 2000 up 8 points. Trading out at 1110. Apple up $2 and change. Trading at 506.75. Microsoft down 42 cents. Google up 92 buckaroonies. That's trading out at 980. Cisco up 5 cents. Intel back 21 cents. You got Google obviously leading the charge here. Chipotle just behind them up 39 bucks. Athena Health, ATHN, that's up a nice $16 this morning. Priceline, the Priceline is above the $1,000 level. My apologies. They're trading out at 1046. They're up $14 this morning. Align Technology, ALGN, up $12. Voxel Jet, AG, VJET, up 80%. What is that? Must be an IPO out there. Yeah, that's an IPO. I was going to say, how's that going to be up? In any event, you've got Amazon. That is up $7. LinkedIn up $5. Baidu up $6 out here. To the downside, we've got Intuitive Surgical. That's off $24. They were out with earnings. Panera Bread looks like their loaf is a little flat this morning, down 2.5%, trading off $4. Acacia Resh, ACTG, they're down 22% out there, so they're getting hammered. Ariad Pharmaceuticals down 38%. Not a good thing out here. That is trading off $1.74. EV Energy Partners, EVEP, that's off 4%, about $1.59. Biogen, BIIB, that is trading down $1.60 out there. Home Depot off $1.14. Costco wholesale down $1.12. So let's take a look here at the weekly charts for the indexes. We've got the S&P 500 index on my chart here at the moment. Now, take a look at that. If we really, it's trading out right now at 1737.43. So take a look at the wide-ranging bar this week. If you're watching us on Tiger TV, the blue diagonal lines on my screen represent the rising price channel. So we would expect price to head up into that range. That's going to get us in that 1776-ish type range out here. If we're looking for resistance inside of the S&P 500. Really, quite frankly, it's hard to find any resistance that is held of any significance. We'd have to go pretty far back in the chart to do that. So let's instead take a look at really levels of support here. And I would have to say the level of support inside of the S&P 500 is right here. We've got this little open window, which was between the week of July 5th. So it goes back quite a ways, and July 19th. A small little gap out there, small little window. It was tested. It was tested back here on the week of August 30th. That level held. That really becomes your next level of support. So no real resistance, clearly, because we're at all-time highs. And, the chart is as bullish as you can possibly get if you take a look at a weekly chart of the S&P 500. Let's go take a look at the Dow. Let's go look at the Dow, see what the Dow shows us for a weekly chart out here. Dow Jones Industrials, that is the monthly chart. We want the actual weekly chart out here. Give me a moment to pull this back. No, that's the daily. I'll get the weekly chart. If we take a look at the weekly chart, I pointed this out in the early part of the week. Last week, as weak as the Dow has been, if we take a look at the hammer candle, that's what actually formed last week. Very important candle out here. So the low of last week is very significant support. That is at 14,719 out here, and that is a level of support. If we take a look at some resistance, this looks like a shooting star, but there's a little gap here between the trading session at wide-ranging bar on September 13th, and that was at 15,380, and the low of that next session, which was at 15,381. A little gap up there, so that's very important. We can say that there's a little bit of resistance up at the high at September 20th, but for what is, and the Dow is getting hit this morning here with IBM. The Dow's off 46 points. A very strong chart out here, a very strong chart pattern. So even though we pick on it as being the weak link out here, it actually is a chart that shows good strength. And really what it has been doing is traveling in a consolidation mode. We take a look at the consolidation here. We'll draw that in on the Dow. Here's the consolidation-ish range out here. It would run from a low of about 14,700, we'll call it, all the way up to 15,650. So nearly 950, nearly 1,000-point trading range. And how about yesterday's comeback inside the Dow? Talk about being down on the end zone with no timeouts and taking the ball all the way back down and scoring a touchdown. That most certainly was not any kind of weakness inside the Dow. So the Dow's got just traveling in a consolidation. And, of course, we know what happens with consolidation patterns. When they break to the upside or to the downside, what they will do is do a move equivalent. So the Dow could be setting up a move to bust out of the top of the trading range because it hasn't been able to bust it to the downside. That would set up a move of about 950 to 1,000 points. That's really what the weekly chart is showing, consolidation and strength down at the lows. Let's go take a look at the Russell 2000 on a weekly basis. In fact, we'll also do actually is take a look. Let's do this first here. Let's go take a look at the Dow Jones Transports. I'll just put it right here inside of this. Give me a minute here. $TRAN ought to do it. And then let's switch over to a weekly chart here. Let's go see if we can find some support and resistance areas inside the transports. Let me get rid of everything that's on here. There we go. So if we take a look at this, the transports, if we were to try to identify any area of real, well, first, there's no resistance here. So where's really going to be the next area of support inside here? We had a little dark cloud cover out here on this candle session of September no, that wasn't. We had a dark cloud cover all the way back here, really, on May the 24th. So I'd have to say that would be our area of support. So the level of support inside the transports on any pullback is going to be right here at the high, which is the high of 65, 68.41. And what we can see, it's clearly above that level. And it's above that level. Now, this was not, even though it looks like a hammer candle, doesn't really qualify as a hammer candle. If you take a look at the body here, the essence of price, now, you know how important it is for me when we take a look at these wide-ranging bars here. And there was not enough of a pullback here on the weekly chart. A little bit different in the Dow, but in the transports, there was not a pullback. Instead, what we really had inside the Dow, I would consider this to be more of a rising 3 continuation pattern. And that's because price just traveled with inside the body of that September 20th candle. If I just simply draw the lines going across the screen here, the body, truly the essence of price. And what we can see is that level was never really broken. Yeah, intraday or intra-week, I should say, because of the extreme emotions out here. But take a look at that break above this area. So very strong-looking chart here as we take a look at the Dow transports. And support would be at the top of that May 24th candle out there at 65.68, well above that area. So the transports have clear sailing. You talk about clear sailing, it most certainly is the Russell 2000. So let's take a look at the weekly chart on the Russell. Let's go try to figure out, where is an area of resistance with inside this stock chart. Now, first on the weekly chart here, we'll pull this back. That wants to get all the way up to the top of its rising price channel, right around the 1138 type range. But if we were to just really try to find an area of resistance on this stock chart, where would it be? I would say it would have to be all the way back here, all the way back in June of 2013. And we're really well above that area. I'll take off the A to B equals CD, a doji candle. This does have a doji on a weekly basis out here. No, it's all the way. This is really the last doji as well, and you can see it's above that. This candle right here, see the body inside of that July 26th area? Look, if you want to call it a doji, that'd be fine. We can, and that would say that it's broken above that level of resistance, the top of that. But probably more of a high wave candle, which doesn't have any support for resistance here. This one most certainly is a high wave candle, which is the September 27th level. So well above any kind of resistance out here. So it's got clear air, clear sailing, all the way up to at least the top of the rising price channel, and it, and that sets up the 1125, 1130-ish type range out there for the Russell 2000. So no resistance here on the weekly chart, and, take a look at this candle for this week. It's as strong and as bullish as you possibly can get out here. Let's take a look at the NASDAQ composite. Let's go take a look at the. Let's take a look at. Here's Steve, one of my favorites. Let's look at the monthly chart. Okay, let's just look at the monthly chart for the Nasdaq Composite. Then we'll go back to the weekly chart out here. Now, on the monthly chart, one of the things that I was showing, there's we always should be cognizant of cycles, and prices tend to travel from high to low, low to high, low to low, tend to travel within 18 to 24 bars out here. And what I've got measured here inside the NASDAQ on a monthly basis is a 24-bar cycle pattern out here. And in most of these cycles, the NASDAQ either hits a swing point high or low out here. The only one that really didn't was back here in June of 2008. Otherwise, it's really good at picking out cycle highs and lows. Well, the next if we take a look at here, we take a look at this price movement. The next time we really see a cycle date out here inside the NASDAQ takes us into about April of 2014. Now, what's kind of cool about this is if we go all the way back from the all-time highs out here, back in 2000, we go from those highs all the way down to the lows that were put in back in, give me a moment here, back in 2009. No, 2002. I take that back. 2002 out here. The .786 level was 36.15. The .618. The .786 level is 42.02. So the next real target for the NASDAQ, and it's trading right now at 38.89, is 4,300. It's going to get back to the 2000 highs. Who thought we would have ever seen this? It's going to get all the way back to the 2000 highs. It's going to at least tag the bottom of that level, which is 43.55. And so quite a sign of strength out here. Now, look, the month is obviously not over out here, but when you take a look at that stock chart, you take a look at the cycle patterns. And as I say, going back into the 2000 time frame, the only cycle that hasn't hit right around it has been one. And so this is now really pointing to a cycle high. It's pointing to a cycle date, and we're going to call that April 30th, 2014. That's either going to be a high or some big, huge move to the downside. But it looks to me more like what the NASDAQ composite wants to do is get up to the 4,300 level, and that is on the monthly chart out there. On the weekly chart, we take a look at the weekly chart. Here's the weekly chart for the composite. You can see blowing through its last primary trading range, which was 38.50. That sets up a move to the top of its rising price channel. I'm going to presume this goes all the way back into the 2009 time frame out here. But if we look at the composite and try to find any kind of bearish signal out here, the only one it takes us really, they got the key reversal day back here, back in May 24th out here. I'd have to say that's really the last time we saw any kind of significant resistance out here. You had a bearish engulfing right here on August the 30th, but that was taken out really the following week, so that doesn't even qualify as a resistance level. So you'd have to come all the way back to that key reversal session on May the 24th out there. So, and you can see clear sailing inside the NASDAQ futures. So, not just strong, but extremely strong out here. So, we got the NASDAQ. Let's go take a look at the New York Stock Exchange. Let's go, let's take a look at the wider breadth of the market, and let's look for some weekly resistance out here, see what we've got. That's the daily chart. We don't want to necessarily pay attention to the daily chart here right now. Let's see if I've got a weekly. So, here's the weekly chart. Man, take a look at that candle. You see, candles don't get any stronger than that. This is we're probably close at our session highs today is what it looks like in the market. And if we take a look at the New York Stock Exchange, we try to identify where there's really any kind of significant resistance out here. It's just it's hard to find. It is hard to find any when we take a look at this weekly chart, it's really hard to find any kind of bearish signals that have held up. I suppose we could come all the way up here to the trading session of May 24th, just like we did in the NASDAQ. That was a key reversal week. So I'd have to say that would be it. And we can see that we are above that level. Let's put that in red across my screen. Let me go ahead and do this. Last week we closed above that. This week we came back and it looks like maybe tested that area. 97.02 was the low. The top of May 24th was 96.95. 96.95. We didn't even get all the way down there. So it is well above any kind of resistance out here. Then that's on the New York Stock Exchange. Now, on the longer-term chart for the New York Stock Exchange, it is going all the way back to its highs in 2007 because it's well above the 0.786 retracement, which is 9,059 out here. So we're looking at the New York Stock Exchange getting all the way back up to its high at 10,387. No bearishness when you take a look at this weekly chart. And that just kind of puts things into perspective, in my opinion. It puts things into perspective because now we've been through all the primary indexes out here, and we cannot locate anything that looks like any kind of now, trends can change, things can change, in a heartbeat out here. But as we take a look at these weekly charts, they look pretty darn good out here. Let's go take a look at Goldilocks and silver. Well, we'll have to do that when we get back from the break. Right now, it is a fantastic Friday, and hopefully, we're all going to have a fantastic weekend. Right now, you've got the Dow is down 12 points, S&P is up 5, NASDAQ up 24 points. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. The Dow is just turned slightly green. It's up $1 right now. S&Ps are up 6. Nasdaq's up 31. VIX index here. That's what I've got on my chart. You can see well below the 50-day exponential moving average. So that's in territory where the bull markets really move. As long as the VIX is below the 50-day exponential moving average, markets either move higher or sideways and consolidate. Yesterday, perhaps I think the most amazing thing, maybe overlooked inside yesterday's market, was that the New York Stock Exchange was actually the leading index yesterday. It was up just over 0.9%. We had net advancing issues like 5-1. That's market breadth out there. And today, right now, you've got net advancing issues a little bit over 2-1, maybe about 2.25, 2.5 to 1 out there. So everything there, you've got all the oscillators that are pointed higher. So everything is pointing to, what the weekly charts are showing us, the bullish runs, the A to B equals C, the tops of the rising price channels out there. Hammer candles inside the weakest index, the Dow out here. So we're going to see prices run up to higher levels. Now, we wanted to go, yesterday I spent some time taking a look at each of the currency pairs. What we were also looking at was the hammer candle on the weekly chart for the U.S. dollar index. So we'll peek in on that. The bottom of the hammer candle, which was from the week of October 4th, 79.72. Right now you're trading at 79.71. Yesterday you did punch through it and it held. but it wasn't a hammer candle. It was punching through some other bullish signal supports out here. But 79.72 is a key level for the U.S. dollar index, of course, to add an additional element. Well, it's so not so much the U.S. dollar index that really tracks the U.S. markets. The U.S. dollar index more so from a commodity sector standpoint. That's really why you want to pay attention to that. It's the euro yen that you really want to focus on when it comes to the actual stock market, because that tracks the U.S. indices better than anything else. What the euro Japanese yen has done thus far, it's made its 0.786 retracement. I've shown you this pattern, or I did certainly yesterday as we were taking a look at currency pairs out here. So, today just having a little bit of just a sideways day as we speak. But what the euro Japanese yen wants to do is get up to 135.65-ish and complete a 1.618 butterfly. I think once that does happen, then we might see a nice retracement inside the markets out there, because these patterns here have performed really, really well out there. So that's what So there's another element here where we're not seeing anything of any significant resistance, at least not just yet. What else should we really take a look at out here that I have? No, I mentioned gold and silver, so let's go do that. Or I mentioned Goldilocks. If we take a look at gold here, this is going to be interesting over the next couple trading sessions. So we had shown that gold was traveling in that rising price channel, and then it created a descending price channel after it made a high back out here on August 28th. Now, we're not the only ones that take a look at trend lines and channel lines out here, so it just depends on how it is that you want to draw it. But here's what's key. Yesterday, it broke through that descending price channel with conviction, and that's got to have all kinds of technical traders looking, because when you break price channels, what people know is that that is the beginning of a change in trend. So after a big day to the upside, and Fridays when gold oftentimes struggles out here, just taking the day off. It had a good day, so it's just going out to the golf course, just a sideways day. And, of course, if we take a look at silver, this is an interesting chart for sure, because this one never broke the rising price channel that it was traveling in. Never broke that rising price channel out here. And all it did here this morning was came back and tested that little subcorrection, that little descending price channel, and it has rejected that level. So, folks, if you're off to start your Friday, have a fantastic day. Otherwise, stay tuned. The Bull Bear Nadex Binary Option Hour, that is coming up next. Have a great Friday, a great weekend. I will look forward to seeing you first thing Monday morning. Take care, folks. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.